What's up, guys? Welcome to episode 19 in my monthly series where I present to you my top 3 dividend stock picks of the month that are designed for income and where I'll give you a high-level overview of the stock market in the last month. So if you're new to the channel, welcome. This channel focuses on a long-term buy and hold income-focused or income-oriented investing strategy. So the primary objective of this strategy is really to generate a safe, consistent passive income forever, right? So we achieve that goal by investing in funds that primarily hold blue chip stocks, right? The big safe companies, and that use income enhancing strategies like the covered call strategy in order to achieve that really high income and high yield. So this strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019, where we invested about $600,000 into the stock market, most of which came from the sale of our paid off condo. So this channel is simply to show you guys how to invest like us for maximum passive income to really achieve financial independence or financial freedom as quickly as possible. So I'm Canadian, guys, so most of the stocks, most of the funds I talk about on my channel, including my stock picks, are listed on the Canadian stock market on the TSX. But since I invest heavily in US listed funds in my RRSP account, one stock pick out of the 3 will be a US listed stock pick. So logically, I want to keep my American friends interested as well, right? So don't forget, as Canadians, you could avoid the 15% withholding tax on US dividends by keeping those funds in an RRSP account. Also, don't forget, guys, to check out my previous monthly stock pick videos as well, especially if you're newer to the channel or you missed them, as many of those picks are still very good and valid stock picks right now. So I actually have a specific YouTube playlist for my stock picks of the month. So it's very, very easy to find them. So now in terms of the stock market summary, finally, the stock market is starting to show signs of slowing down a bit, some volatility instead of it just going up and up and up and up every single day, right? So finally, some excitement for us, guys. Now, you might be asking yourself, why is this a good thing? Especially if you're a newer investor or you recently switched to my style of investing, the income style, which I know many of you are watching have. So you might be having some jitters when you see your funds going down a couple of percent, right? Multiple days in a row. This is completely normal, guys, and you will get used to it. So just like the market can't just keep going up and up and up and up, it can't keep going down and down and down and down, right? So it's funny how nobody ever complains when the market goes up, but then when it starts going down, everyone just starts coming out of the woodwork, right? So don't forget that the tide can turn very quickly and suddenly, my friends, and where covered call funds really shine and outperform the overall stock market is during a flat or volatile and down market, right? So it's all thanks to those covered calls, of course, which protects our income and really acts as a stabilizer. So as long as we keep getting that income, guys, we're happy. There's nothing to worry about. So don't worry, take a breath, chill, and relax. Growth investors, on the other hand, might be nervous, right? Because they are 100% dependent on what the stock market does, on what their stock prices do for their returns. Us income investors, much less dependent on the stock market and stock prices because we make our return with our income. So we're really dependent on time, patience, and discipline, not really what the stock market does. The longer we hold, the longer we buy and hold, the more income we make. So the more we pay off our initial investment, right? So the 4 criteria, as usual, for my stock picks. Number 1, I own the stock myself or fund myself. Number 2, this fund must provide a consistent source of passive income, of course, so a dividend or a distribution. Number 3, the distribution must be relatively safe and sustainable and consistent. And number 4, the fund must have good value. So without further ado, guys, here are my stock picks for the month of October 2021. All right, guys, so pick number 1, as usual, this is my US listed stock pick, is the River North Opportunities Fund. So the stock symbol is RIV or RIV. So the fund manager is River North. It has a monthly dividend and the annual dividend is currently at $2.04 a share. So RIV is really a leveraged closed-end fund or an income fund that really seeks to capitalize on the inefficiencies, in the closed-end space. So basically what they do is they hunt down closed-end funds trading at discounts. So they invest primarily in closed-end funds and ETFs as well, while providing us exposure to multiple asset classes. So I know it's a handful to take in, but I'll explain a little bit in a bit here. So the 1 year high stock price, it was 1875, which gives you 10.88 yield. But right now, as of September 30th, the stock price is $17. So you get a beautiful 12% right on the nose dividend yield, which is absolutely phenomenal. So let me show you here what the fund actually holds. So at the top here, you could see this is the investment vehicle allocation. So you could see that most of it, 56%, is invested in closed-end funds. So this is a collection of closed-end funds. There's also a nice chunk in SPACs. So SPACs are special purpose acquisition companies, very popular in the US, which are companies designed to take companies public instead of going through the IPO process. So very, very popular nowadays, very, very lucrative, and they have done really, really well in the States. So I'm really happy to have a nice chunk in SPACs, because for us Canadians, it's quite hard to get exposure to this type of stuff. So this is an awesome fund for us Canadians. Then you have some other stuff as well, company bonds, BDCs, treasuries, and at the bottom you see the actual asset allocation. So a lot of fixed income here. There's equity, BDCs, and SPACs, as we saw. So a nice mix of a lot of different stuff, which is very hard to reach for Canadians. So a great place for the RRSP. So the key points and reasoning. So why is this a stock pick this month? Well, on September 22nd, the fund announced a rights offering. And we all know what happens when a fund announces a rights offering, the share price goes down. So it has gone down for RIV in the last month or in the last couple of weeks. So the share price is actually very, very close to the NAV price. And this is good because this fund usually trades at a premium. So the stock price is usually higher than the NAV, but right now it's not the case. They're pretty much neck and neck. So it's a great time to pick it up. Of course, it has extremely cool diversification with plenty of harder to reach asset classes in Canada, like SPACs and high yield fixed income, like we saw in the previous slide. I also love the concept of this fund. So this fund, and I strongly suggest you check out their website. You'll see a lot of information there. But basically what they do is, just like the description says, right? They seek to capitalize on the inefficiencies in the closed-end space. So basically what they do is they look for funds or closed-end funds that are trading at discounts. So it's a really good concept, in my opinion, really good idea. Of course, you have high monthly distributions and a great dividend policy, which is quite typical for a lot of these funds in the US, where their dividend or their annual dividend rate is reset annually. And this one is reset to 12.5% of whatever the NAV is. So the dividend at the current NAV is actually set to increase next year, because right now the NAV as of end of September is about 16.85. So if you take, what's 12.5% of 16.85? Well, it's $2.10, which is higher than the current annual dividend of $2.04. So it's a little bit, not that much more, but still, if the NAV stays the same until end of the year, it's going to be reset at the end of the year. So if the NAV stays around 16.85, the dividend is actually going to go up next year. And of course, like I mentioned, this is great for the RRSP. That's where I hold this fund in my RRSP, because there is no 15% withholding tax. Pick number two and pick number 3, of course, are going to be listed on the Canadian stock market on the TSX. So pick number 2 is the real estate and e-commerce split fund from Middlefield. So it's RS, guys. RS is a stock symbol. So the dividend is monthly. The annual dividend rate is $1.56 a share. So this split fund, like we all know, I've been talking a lot about it lately. It holds some of the best REITs in Canada, and it uses leverage to really boost the distribution yield. So it's literally the only split fund in Canada that focuses exclusively on real estate. So really, really awesome. So the 1 year high is 22.78, which would give you 6.84, but recently it has dipped down. So right now it's about 17.40, which gives you an absolutely great dividend yield of just under 9%, which is really, really good for REITs, for real estate. So here are the holdings, all 15 holdings. The date is June 30th, so it's a little bit behind, but this will give you a good idea of what kind of REITs this split fund invests in, right? So you'll recognize a lot of them. These are pretty much the biggest and best REITs in Canada, guys. So RioCan is there, Smart Centers is there. The biggest REIT in Canada is there, number 10, Canadian Apartment REIT. You have Killam Apartment REIT. And you also have a couple of medical ones. You have Chartwell at number 4, Northwest Healthcare number 15, and a bunch of others, right? Crombie, Dream Industrial, WPT, which just got recently bought out by Blackstone. So really the best of the best, high quality, big cap REITs here. No small guys. And my points and reasoning for this one, finally, real estate or REIT stock prices are cooling off a bit, giving investors a good entry point here. So this split fund actually increased their distribution or their annual dividend from $1.20 to $1.56 on August 17th because of its success and the buyout of WPT REIT by Blackstone. So that helped the fund a lot. So the yield is just under 9%, guys, which is beating even the highest single REITs in Canada, which is like Innovalis and True North Commercial. I covered Innovalis in a recent video, by the way. So basically you have the best yield possible for REITs and lower risk because you have more diversification, right? You basically own a piece of 15 REITs instead of owning the REITs individually. So higher yield, lower risk, it's a no-brainer. So this fund is really to own the best cyclical REITs in Canada. So cyclical meaning things like RioCan and Smart Centers and residential retail stuff. But it also focuses a lot on the lucrative and growing industrial real estate market. So anything to do with e-commerce, and you could see that the breakdown here. So it's about 70% cyclical and a nice chunk, 30% in e-commerce REITs, which is basically industrial REITs. And this fund also uses leverage. So another thing, yes, it is a split fund. So it has that $15 unit NAV rule, right? Where the unit NAV being Class A share plus the preferred share combined must be over $15. But right now the unit NAV is over $27. So it's way over the $15 minimum for distribution payout. So I consider this probably the best fund ever in Canada for real estate. You cannot go wrong. High yield, safe yield, good quality, really good asset manager, middle field, which are real estate experts. So this one, guys, was a no-brainer this month. Pick number 3, and to be honest with you guys, I was tempted to put CGXF, the gold producers, again, but I'm not just going to keep putting CGXF month after month after month. But to be honest with you, I still think CGXF is a great pickup. It's very, very cheap right now. So check out my last month's stock picks to see CGXF. But pick number 3 this month, it has to be Canoe EIT Income Fund. So the stock symbol EIT.un, once again a Canadian listed fund. So it's managed by Canoe, a very reputable mutual fund company in Canada. The dividend is monthly. The annual dividend has been the same for over 10 or 15 12, 13 years now, $1.20 a share, so 10 cents a month. So EIT is the biggest closed-end fund in Canada that uses up to 20% leverage, so very, very modest leverage. And the fund manager really uses an active approach, right? But investing primarily in dividend growth stocks with great value. So whenever you see a fund that says active, it means basically they're stock picking. But nobody does it better than Canoe Financial. So the management fee is 1.1. That's why it's a little bit higher than ETS because it's really an active fund. But in my opinion, they greatly deserve the 1.1% management fee. So this gives you an idea of what this fund holds, guys. I absolutely love the diversification because although it focuses a lot on Canada, and you can see Canada 50% of the fund, it has a big chunk in the US, which I think is extremely smart. And that's where the healthcare, if you look at the equity sector breakdown here, you see a really nice chunk in healthcare, which there's basically zero healthcare in Canada. So this is where a lot of the US equity comes in. We're talking about Johnson & Johnson, CVS Health, United Health Group, Anthem. So there's a lot of big cap healthcare companies in this fund, which I really like. Obviously, it's Canadian, so the first two, financials and energy, shouldn't be a surprise to you. That's where Canada has most of its really is the two biggest sectors in Canada, right? Financials and energy. But by throwing in healthcare, it brings a nice diversification. So I absolutely love this fund's diversification. So my key points and reasoning, why is EIT a pick this month? Well, it has amazing consistency in terms of dividend payout, and also it has amazing quality stock selection. You can check out the top 25 stocks on their website. It's right there on the homepage, but really all quality blue chip companies. I also like the fact that this fund manager, Canoe, is pretty bullish on energy, and the top stock in the fund, Tourmaline Oil Corp, recently announced a dividend increase, proving they really know how to pick stocks, really to pick quality value stocks. So this is really a fund. I think of Warren Buffett when I think of this fund. These guys are basically trying to replicate what he does, trying to find amazing businesses and really look at their numbers, right? To really try to what has great value. So I trust these guys 100%, and the stock price doesn't lie, right? So like I mentioned, the addition of healthcare companies, 20%, is really genius in my opinion, because it balances out the heavy exposure in the Canadian market, which is very focused on financials, energy, and even materials being gold producers, which are dominant in Canada. So the share price, another thing I really like, is way past pre-COVID levels, which is really an amazing thing for an income-focused fund, which is beating a lot of covered call ETFs, which are still not even past the pre-COVID levels. I'm thinking of things like ZWC as an example, right? So it just proves that these guys know what they're doing. And then just the cherry on top, guys, is that this fund is still trading at a discount to NAV. So although it's very, very small, and I actually put the picture for you here. So the stock price, this is yesterday's data, at 1234, well, the net asset value is 1246. So even though it's only 10 cents or 12 cents, it's still higher than the actual stock price. So a great deal all around. Cannot go wrong with EIT. I hope you enjoyed the video, guys. Please show your appreciation and your support by hitting that like button. It's free for you. It takes 1 second, and I would really appreciate it. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could access my digital product, the Ultimate DIY Investing Package, which basically is all my years of research of the best funds, and it also has sample portfolios. So everything you need to build your own portfolio, and it comes with lifetime updates. I'm on version 2, but version 3 is gonna come out in the next month or so. So I'm very excited about that. I'm sure you guys will love it. It's gonna have a lot of upgrades, including a lot more sample portfolios, which I know you guys love. Also on my website, you could book a one-on-one consultation with me personally via Zoom if ever you want me to review your portfolio, help you build a new portfolio, whatever, all your questions, whatever your needs are, I'm there to help. Of course, the calendar is completely full for October. My appointments sell out like in 5 hours. It's still mind-boggling to me. So stay tuned for the November appointments. I will let you guys know via the Facebook group or a community post as well. So it's very easy to book an appointment. The calendar is right there on my website. So I'll let you guys know when November opens up. But make sure you join my Facebook group, because if there's any cancellations, I'll let you guys know there. Finally, make sure you're subscribed, guys, so you don't miss out on future content. And like I mentioned, join our Facebook group. That's our social media. We have 4,000 members in this private group. It's really, really awesome. A lot of people ask questions, a lot of cool conversations. And of course, we're also on Instagram. So join us there if you use that social media platform. Our mission remains the same, guys. The mission of this channel is to help everyday normal people invest on their own in order to really maximize their passive income, so they could achieve financial independence as quickly as possible. So with that, take care, guys, stay safe, and see you next time.